Heikin Ashi technique, which I believe will be a very huge game changer for a lot of you. So this technique will be useful for making candlestick charts more readable and trends easier to analyze, because remember guys, keep in mind, most profits are generated when markets are trending. So predicting trends correctly is necessary. So for today's video, I'm going to be using Tradingview, again, completely free to use guys. So I'm going to start by taking a look at the chart for NVDA, and I'm going to be using the daily chart here. So the very first thing I want to start with here is, where do we find the Heikin Ashi chart? So what you want to do here is you want to go over here where you go to choose and look at the candlestick chart. If you take a look and you go a little bit lower, you will see Heikin Ashi. So go ahead and click on it here. Now the very first thing that you should see, and this should just pop out at you, is that Heikin Ashi has a smoother look. Notice that there is a tendency with Heikin Ashi here for the candles to stay red during a downtrend and stay green during an uptrend here. Whereas with a normal candlestick chart, you will see the candles alternating color, right? So if you take a look here, right, for example here, NVDA was in a clear uptrend. Notice that all of these candles, minus this very small red candle, are green. And then here, when NVDA was in a clear downtrend, again, notice that all of these candles, minus these small two little green candles here, all stayed red, right? So it has a much smoother look, because if we take a look here at a regular candlestick chart, notice that during the same uptrend here, right, you see multiple red candles. And then during the same downtrend that we just looked at, you see multiple green candles, which can really confuse traders, give false signals, just make a lot of noise here. So right away we see a benefit here right away is with the Heikin Ashi, it's a lot smoother. The chart here is going to be a lot smoother. Now the very first thing I want to talk about here is how these candles are calculated. I'm not going to spend a whole lot of time on it, but I do just want to quickly mention it here guys. So let's actually take a look here at one of these candles, and let's just talk about how the candle is calculated. So let's say you want to take a look at this candle right here. So first of all, how is the open calculated? So the open is calculated very easily. It's basically going to be the midpoint of the previous bar. So if we take a look here where this candle right here opened, it is literally the midpoint of the previous bar. And so the exact formula is going to be this right here. You take the previous bar open price plus the previous bar close price, you divide it by 2. That's how you calculate the open. So what about the close? How is this close up here calculated? So the close, the formula for the close is basically going to be the average price of the current bar. You find it by taking the open plus the close plus the high plus the low divided by 4. That's how you calculate the close. Finally, we have the high. The high is going to be the highest of any of these three values for the current bar. So the highest of the open, the close, and the high. And then the low is going to be the lowest of any of these three values for the current bar. So the lowest of the open, the close, and the low. So that's all I'm going to talk about for that, guys. Why? Because remember, this is not important. Remembering these formulas, how they're calculated, they're not really important. They're not going to help you make money. What's important is how we can use these candles and the Heikin Ashi here, okay? So the next thing I want to move to here is briefly talking about the 3 types of candles that you really want to watch out for right now, especially if this is your first time hearing or learning about the Heikin Ashi. So there's 3 types of candles we want to watch out for here. The first type of candle is what I like to call a bullish green candle. So it's going to be a candle here like this one right here, and the characteristics of it are it's green and it has a relatively larger body, as you can see. And the most important thing I would say here is that it has no lower wick, right? And in fact, you see multiple examples of this right here, right? All of these candles right here have relatively larger bodies. They're all green. None of them have a lower wick. This indicates a very strong uptrend here. And as you can see, right, NVDA went up pretty high during this time here. So that's the first type of candle you want to watch out for. The second type of candle is going to be the same, except we're going to be taking a look at red candles. So for example, here is an example of the second type of candle you want to watch out for, what I like to call a bearish red candle. So again, same concept. The candle should be red, should have a relatively larger body, but now instead of having no wick on the bottom, we want to make sure that these candles have no wick on the top, so no upper wick. Again, you see multiple different candles here that fit this criteria. Relatively larger bodies, they're all red. None of these have upper wicks as well. This is an indication of a strong downtrend, and in fact, indeed, right, NVDA dropped in price quite a bit here because it was in a strong downtrend. Now, the third type of candle you want to watch out for are going to be these types of candles right here. So this one that I'm hovering over right now. So these candles are going to have a very small body. As you can see, the body is very, very small, and they're going to have both upper and lower wicks. So these are also known as doji candles. And these candles are very important because a lot of the time they indicate a potential trend change, which for example this candle did, right? We were in a pretty strong uptrend here. NVDA made a huge move upwards. And then we saw one of these doji candles, again a very small body, it has an upper wick, a lower wick, and what happened after this? The trend changed. Now, it's not always going to be the case where you see a doji candle and the trend will change, but a lot of the time it's a good indication that there's going to be a potential trend change. So these are the three types of candles we want to watch out for here today. And so with that being said, how can we combine all of these things that we just talked about and use it in a strategy? So here is a potential strategy you could use by using the Heikin Ashi here. So the very first thing we'd want to do is we would want to first determine what the trend is. Remember, the trend is your friend. You do not want to trade against the trend. So for this particular strategy, I like to personally use the 100 EMA line. So let's actually go ahead and show that here. So I already have it here. So I'm just going to go ahead and make it visible. So it's going to be this blue line that you see here. This is the 100 EMA line. And so here is the way we can use this 100 EMA line to determine what the trend is. So basically, when it comes to the 100 EMA line, if the EMA line is sloping upwards and the price is above the 100 EMA line, that lets us know that the midterm trend is in an uptrend, okay? And similarly, if we take a look over here and we see the 100 EMA line sloping downwards and the price is underneath the 100 EMA line, that lets us know that we're in a downtrend. And so basically the way we use this then is if we're in a downtrend, we only want to look for selling opportunities. Again, remember, the trend is your friend. You don't want to trade against the trend. If we're in an uptrend, though, we only want to look for buying opportunities here, right? So that's how we use the 100 EMA line. And so here is kind of how you would set a strategy up here, again, using the 100 EMA line and using the Heikin Ashi. So basically what we want to do here is we want to wait for a pullback of the price to the EMA line. Remember, another great thing about these EMA lines is that a lot of the time they act as areas of support and resistance. So for example, if we take a look here, right, if you take a look during this time frame, if you go back to, August, September, October, right, what do we see? First of all, we see the 100 EMA line sloping upwards, prices above it. Okay, so we were in an uptrend. We only want to look for buying opportunities. Next, we want to wait for the price to pull back to the 100 EMA line, right? Because again, the 100 EMA line, a lot of these EMA lines, they act as an area of support and resistance. So we actually see this right here, right, where the price pulled back right to the 100 EMA line. So now after we saw this, now we're going to use the Heikin Ashi to potentially enter a trade. And so here is what we would want to look for next here. So after it has pulled back to the EMA line here, the 100 EMA that we're using here, right? We want to look and notice right away, first of all, that you start to see some doji candles here. Again, remember, what do these doji candles signify most of the time? They signify that there's a potential trend change, right? They indicate a potential trend change. So after we saw this, right, we might have, told ourselves, hey, we're potentially looking for a trend change here. So now here's what we're looking for after this, right? So we're looking only for buying opportunities, and it has pulled back to the 100 EMA line. So now what we're looking for is we're looking for two of these bullish green candles that I just talked about not too long ago to show up one after another. And where do we see that? We see that right here, right? Because we have these doji candles. We had a nice bullish green candle, but if we look at the next candle, this body is just not, it's not that big, right? It's relatively small. So this is not a bullish green candle what I like to call it. Right, so we continue here, we see some more doji candles, again indication of a potential trend change here. Then we see another bullish green candle. So like I mentioned earlier, right, we have relatively large body, it's green, very important that we see no lower wicks. That tells us that there aren't any sellers. And then the very next candle is another bullish green candle. And so here is our confirmation, right? So again, another green candle, relatively large body, very important that we have no lower wick, which it doesn't. So potentially here, after we had our second bearish or bullish green candle show up here, right, one after another, here might have been a potential good place to enter a long position here. And if you had done that, as you can see, NVDA made a huge move after this, right? So you would have definitely made some money after that. So again, what do we see here? We first determine the trend. We know we're in an uptrend here. We're only looking for buying opportunities. We wait for the price to pull back to our 100 EMA line. After this, we notice a lot of doji candles, potentially signaling a reversal here. And then finally, we're looking for two of these bullish green candles to show up one after another. Relatively larger bodies. They're both green, and very important that they don't have lower wicks. And then eventually after the second candle that, it's confirmed, we potentially enter a trade. And as you can see, huge move upwards. Now, what about a downtrend example? Let's take a look here at a downtrend example. So let's go over to AMD now, and let's go ahead and talk about a downtrend example here. So again, the first thing we do here is we plot our 100 EMA line, which we have right here. Again, notice that it acts as a nice area of support and resistance. In this scenario, resistance here. But we identify the trend, right? The blue line here, the 100 EMA line sloping down, price is underneath it. So we're in a downtrend here. We know that. So we're only looking for selling opportunities. We don't want to go against the trend. The trend is your friend. So if we take a look here, right, we wait for the price to pull back to the 100 EMA line, which it does right here, right? As you can see, it pulls back all the way to the 100 EMA line. So again, here, after it pulls back, now we're potentially looking for a selling opportunity. So again, we kind of see a doji candle here, body relatively small, wick on both sides, so potentially signaling a trend change. Now again, what we really want to look for is we want to look for two of these bearish red candles to show up one after another. And again, we see that here, right? We see that the first candle here, a red candle, no upper wick. Notice this candle before has an upper wick, so we wouldn't count that. But this one has no upper wick, so we would count that. Relatively larger body. And then the next candle, same thing. Red candle, relatively large body, no upper wick. So at the end of this candle, we potentially enter a trade. And again, if you had done that, right, you could have potentially made some nice profit here. So that's potentially a way to use this strategy here, right? Again, you first determine the trend. If you're in an uptrend, only looking for buying opportunities. Downtrend, only looking for selling opportunities. Wait for the price to pull back to the 100 EMA line. We notice some doji candles, potentially indicating a reversal coming. Then we look for confirmation by looking and making sure we see two of these bullish green candles show up after another, or two of these bearish red candles show up one after another. and then potentially entering a trade after we see that, because again, remember, that indicates a strong uptrend or a strong downtrend. So anyways, if you guys have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, a link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I'll see you guys next time.